Welcome. My name is Deontay Pierce, and I'll be taking just a few moments to go over with you the low risk, high return benefits of investing with HighHouse Investments LLC. Today's agenda will cover the introduction, investment alternatives, why apartments, it's apples and oranges, why HighHouse Investments LLC. Introduction. Who are we? Real estate investment group specializing in multifamily real estate acquisitions, preferring performing assets, some value added, management team with over 25 years combined experience, and the management team currently holds a portfolio of over 58 properties. What do? We focus primarily on multifamily investment property in emerging markets, market analysis and research, due diligence process covering 9 key components, assets motivation and negotiation agreements, locate and secure financing, business plan execution, asset management, and oversee disposition. How do we do it? Market investment opportunities to accredited investors, create entity to organize investors and operate the investment, secure investors' interest by providing appreciation, growth, equity, cash flow, and multiple forms of insurance. Under management, HighHouse Investments and our management team currently manage a portfolio of properties that consist of more than 58 properties and 1,800 units. Investment alternatives. Will your money last as long as you do? The 2010 EBRI Retirement Readiness Rating shows dramatically high percentages of Americans, even in the upper income categories, are likely to run short of money after 10 or 20 years of retirement. Percentages likely to run short after 10 years of retirement are as follows. Lowest income quartile, 41%. Next lowest quartile, 23%. Third income quartile, 13%. High income quartile, 5%. Percentages likely to run short after 20 years of retirement. Lowest income quartile, 57%. Next lowest quartile, 44%. Third quartile, 29%. And highest income quartile came in at 13%. Top 4 investment concerns: safety, control, security, and high returns. Traditional investments: stock market, mutual funds, money markets, and bonds. Stock market: highly volatile. American households lost $17.5 trillion in net worth from 2007 through 2009, influenced by world events. More than half the companies on the S&P 500 in 2007 are no longer on it. Mutual funds: returns tied directly to the performance of the stock in the fund. Load charges to buy shares. Back-end loads to sell shares, also called exit or redemption fees or contingent deferred sale charges, known as CDSCs. These are the opposite of front-end loads. Expenses that the fund occurs in its operations, operating fees to cover amounts paid to fund managers, and expenses of buying and selling shares. Capital gains from selling mutual fund shares. Money markets and bonds: low risk, low return investment. You may pay for the liquidity by receiving less in return from the certificates of deposit. Subject to negative impacts of inflation. If your account falls below the minimum required balance or you exceed the limited number of transactions, you could pay a penalty. Money market accounts often require a large minimal balance. The interest rates are modest compared to other investments. Selling bonds before the maturity may result in a loss. You could lose your money if the issuer of the bond declares bankruptcy. Is your money going up in flames? Money market at 2% annually at a $100,000 investment at 2% compounded interest yields $2,000 in interest. U.S. Treasury bonds at 1.66% interest over 3 years, that same $100,000 investment at 1.66% for 3 years yields $4,980. Stock market, it's a yo-yo. It's becoming more like gambling and less like investing every day. Why apartments? Strong multifamily fundamentals. Apartments almost always provide a more affordable housing option. Apartments are usually on a month-to-month lease and sometimes up to 1 year. Economies of scale. Increasing rental demand as echo boomers enter the market. Tighter lending standards make it difficult for buyers to buy a new home. Multifamily development significantly down from 2008 through 2011 due to less supply, and demand is quickly outpacing supply. Benefits of apartment investing: appreciation and growth, cash flow, tax advantages, hedge against inflation, leverage, and turnkey. Appreciation, dramatically increase enforced value, increase income, control/decrease expense, improve the asset. Increase equitable position, principal reduction, improving fundamentals, growing markets. Cash flow, low risk, high return. Passive investment, preferred returns 6 to 8%. Annualized returns approximately 15 to 30% over 3 to 5 years. Tax advantages, depreciation, no capital gains tax through IRS 1031 exchange. Hedge against inflation, housing affordability, short leases, 1 month through 1 year. Replacement cost. Leverage your money, low cost of capital. Minimal initial investment controls large asset. Appreciation calculated on the value of the asset, not the equity. Turnkey, HighHouse Investments LLC manages the company and implements the management plan. Most acquisitions are turnkey, existing income, not a new business. It's apples and oranges. Why not invest in single-family homes? Economies of scale. Financial impact of vacancies. Management intensive. The numbers make little sense. Competitive environment pushes prices higher. Short-term capital gains tax. Remember this, money market, 2% annually, $100,000 at 2% compounded interest equals $2,000 in interest. U.S. Treasury bonds, 1.66% for 3 years, $100,000 at 1.66% for 3 years yields $4,980. Stock market, as we mentioned before, it's a yo-yo. It's becoming more like gambling and less like investing every day. Multifamily investments with HighHouse, $100,000 at 8% preferred return equals $8,000 in interest. $100,000 at an 8% return for 3 years yields $24,000. Appreciation participation, cash flow participation, and tax advantages. There's just no comparison. Low risk, tangible asset, high returns, passive income, safety and security through equity, appreciation, and insurance. Multiple exit strategies through sell and refinance. Recession proof, demand increases during economic downturns. Value determined by NOI, net operating income, not market conditions. Why HighHouse Investments LLC? Top 4 investment concerns: safety, security, control, high returns. Our mission: HighHouse Investment LLC combines vision, creativity, strategy, knowledge, and the ability to meet and exceed our clients' objectives. Our mission is to identify low-risk, high-yield investment opportunities and provide the services needed to maximize the potential of those investments. We treat each investment individually, which allows us to capitalize on its full potential. Why HighHouse Investments LLC? Low-risk, high-return investment, combined 25 years experience, assets secured by real estate, appreciation, growth, equity, cash flow, multiple forms of insurance, income and equity participation, ability to self-direct IRA and 401k, diversification, passive investment, and HighHouse is a competent, educated market leader. So, are you ready to learn more? If what you have learned during this short presentation sounds interesting to you, we invite you to contact us to learn more. You can visit us on the web at www.highhouseinvestments.com or by email at info@highhouseinvestments.com. And as always, by telephone, 404-375-8604.